Okay, let's move and talk to Peter Cook. He is Chief Investment Officer at Performance Trust Investment Advisors, standing by in Chicago. Pete, warm welcome as always. When you're looking at Greece at the moment, we were just having this discussion with another analyst. Is it more about dominoes now, or is it actually, in your view, about an internal unwillingness to take their medicine?
Well, it isn't only Greece on that one either, Carson. Remember that more than half of the people in Germany don't want to bail Greece out either. So I think the market is appropriately concerned that if there is a bailout package that they've agreed to, which it appears they have, when I say they, I mean the politicians, the question is, will the populations actually accept them? So that is a major question of the day as far as Greece is concerned. And if you can't get Greece across the line, well, then what does that mean about Spain, Portugal, Ireland, and the rest? In the bigger picture, what's happening right now is there's a... Go ahead.
Go ahead. Well, no, I didn't want to interrupt you, actually. You're on a roll there. I was just going to say, are you getting clients ringing you with exposure into Europe saying, what do I do? Because it seems if fear breeds in on itself. So when they see pictures of riots, is that a sell trigger?
Not as, I mean, actually, that'd be a buy trigger. As Sir John Templeton used to say, buy when there's blood in the streets, but I don't think there's blood in the streets yet over this particular issue.
Well, overnight, three people were killed, Pete. 3 people dying overnight.
Okay, there's blood in the streets by that definition. I agree, but I guess I was looking at more broad unrest. And look, if 3 people dying means that it's an evidence of the population that doesn't want to accept it, as you say, take the medicine, that's just half the trade. The other half of the trade is, does the German population, will they authorize the Germans to actually put the money forward? And again, if you can't get that on Greece, and you've already seen what the market reactions have been and the volatility that it's spawned, what does that say about the ability to do so in Spain, as I said, Portugal, Ireland, and the rest, in Italy? And the bigger picture here is that there's 2 main forces that are colliding with each other. One is the cyclical upturn in the economies, in the world economies, and the other one is the secular problem with the instability of government finances. Those 2 things are really going hard at each other right now, and that's why we have a stalemate and volatility. But it could break, I think, more likely than other. If it's going to break one way, it's going to break to the downside, not to the upside from here.
A cynic would say that this crisis, as it's unravelling, is proving to be the US's saving grace. You look at US treasuries, an appetite, a flood of renewed interest. How is that helping your fiscal situation?
Well, interest rates going lower, of course, all other things is equal, is good for the economy, with the exception of those who save. But there is a knock-on effect to the U.S. capital markets as a sign of safety, and we certainly are seeing a flight to the dollar out of the euro. But it could well be that the market is just recalibrating the likelihood of the euro disintegrating. And if that does, that currency is going to be worth a lot less than the 128 per dollar that we're seeing today.
Are you also believing that the market is possibly now just reassessing the bull run that it's been on in the last few weeks? Because, on the back of earnings season and the expectations, we're still seeing those employment numbers fairly lackluster. Now, you've got to get the consumer spending momentum in. It might have been evidenced last month, but what about the follow-through?
Well, I think if we get a poor unemployment figure, or I should say a payroll gain, if it's not very high, on Friday, I think you begin to undercut the whole cyclical scenario, the cyclical recovery scenario, or the strength of it at a minimum. If that's going on at the same time that we're getting restrictive measures, not only in China, but even in Norway and India, the central bank tightening is making its way from east around the globe to the west. And that just is, and at some point it's going to hit the west as well. But for right now, all the market is seeing is the restrictive nature of those policies, and ultimately, if you're not getting a very strong uptick in the economies from this point on, it's going to lead people to question: are the earnings actually sustainable? And therefore, the stock market level actually sustainable?
Well, that's the question, because you've got to have a buyer for every seller. And if Europe is now beginning to show such collective weakness, you can't put all your eggs in one basket and look just to Asia.
No, I guess you can't. And of course, most institutional investors, unfortunately, don't have the choice of whether to hold cash or raise cash. Their sort of mandate is to be invested. And in a bear market, they simply are trying to choose among the lesser of evils. For investors who can be more flexible and either hold cash or, for that matter, even short things, it's possible that the upcoming period of volatility here is actually going to be one in which one could make quite a bit of profits.
All right, we've known that Jean-Claude Trichet will be speaking Thursday morning at their time on the back of the latest interest rate decision. Are you expecting more jawboning, Peter? People are saying, look, the president has to do something actually strong-willed. It can't all just be rhetoric now.
Well, exactly. And I think, he's in a difficult position because the uncertainty that's being created on the fiscal side obviously makes his job more complicated. And he's not going to be able to say one thing definitively or another until he sees the outcome of the packages. I would guess that if the Grecian package is not allowed to come through one way or another, either because the Germans won't give it or the Greeks won't accept it, then he's probably got to turn on the monetary spigots to try to save the situation, because obviously there's quite a bit of volatility given the sheer size of the hole in the finances that we're seeing across the globe in the government finances.
Peter, it's not going to go away today or tomorrow. Next time we talk, no doubt there will be new, fresh developments. For now, many thanks.